Hi traders and welcome to Pepperstone's Technical Analysis Market Wrap on Friday, July 31. So I've seen some really good moves on the majors this week. Some of the big breakout moves have been from the euro and the pound and also the dollar yen on the way down. So we'll jump straight in and have a look and see if we can identify any opportunities in the coming hours and early next week. So we'll start out here with the Aussie USD. We'll start the daily chart as we always do. You can see it's had a really big move. This week's been a pretty strong week for it. It pretty much tested the highs that it did last Friday. You can see here, like it pushed up last week up to the almost to 72. It's broken past that a little bit, gone a little bit higher. And now we can see a big rejection candle. This is, still simulating really what the S&P 500 is doing. It's kind of in this range now. We have to go out a fair way to actually see where the next real resistance is. Now you can see it's right on it. I mean, we'll put a horizontal line there to highlight that. So this is obviously an important zone, but like I've said, quite a few times before, you can see here it was good support. It was resistance. This is gonna, have trouble basically every 50 to 100 pips now. So, what it does from here, is basically going to have to go in increments of probably 50 to 100, which is fine if you're scalping anyway. So, I mean, even if you're trading the trend, that's okay as well. But you know where your targets are and where you can roll your stop losses up to basically protect your profits or even your entry points if you're entering a little bit late. But you can, fully expect that this was, trouble all the way down every 50 to 100 pips. You can see all of these points here are going to be resistance on the way up, as they were on the way down. So you can fully expect that's going to happen. 72 cents is going to really, it's going to top this one out. I mean, it's going to be having a really difficult time breaking past this level here. It's gone up there fairly quickly. You can see that, like this is a weekly chart, obviously. So every one of these candles represents a very strong week. And this week is no exception. So, it's hard to imagine that it can get past this level here without some sort of a pullback. It's really accelerated away from the 20 moving average, even on a weekly chart. And even, when we go to the daily, you can see that it hasn't really touched it for a little while now, not since the middle of the month. So, is it due for a bit of a pullback? Yes. Very hard to preempt it though until it actually does a small time frame change of trend. What we want to see at around this level here, we know historically this is going to be a pretty hard level for it to break past. So what we need to do is go down to probably at least a 4-hour time frame where you'd say it needs to make a series of lower highs and lower lows to reverse this trend. You just have to wait for a 4-hour to do that. It's very difficult to go to a smaller time frame because this can just blast through and potentially push on to 72.50 or even maybe to the 73. So you have to be very patient with this one. Wait for a 4-hour change of trend if you want to try and short it down to the next pullback zone, which is more than likely the direction it's going to go, but you've got to tread fairly carefully with it because, like I say, it is an extraordinarily strong move up and you need a significant time frame change of trend to actually reverse that. Other than joining this trend, if you're not already in it, if you were in it, you'd probably be out because, 72 or even the high 71s is probably the area where you certainly would have been taking profit. If you haven't, wow, like you must be in for a very long ride because this has been a pretty good move up. So the logical place for this to reload is down at that sort of middle 70-50. That's the area that you'd want to see it retest if you are going to go long on it again. This is the area it's got to pull back to around this level here, just above the 70 cents. If it did that, it would be a reasonable long. Like there's no question about that because then it's probably going to find its zone in between the 70 and the 72, which is probably the sensible approach if this was going to be a good trading proposition in the next little bit for a sideways moving market. It's more than likely going to hover between the 70 and the 72. So ideally, in a perfect world, this would reverse from here, come back down and test the 70 area and hopefully find support where it needs to find it. I'm not predicting a really big short on this because this is going to be determined by, what really happens in the broader market. It's obviously mimicking a couple of the other majors. So what we want to be seeing is, some sort of a consolidation around this zone before we start looking at going long. A break of this zone would obviously send it short, but that's, quite a bit away. So we'll keep an eye on this. What we're looking for is a 4-hour change of trend at around this level. So a series of lower highs and lower lows. and potentially short it down to this level here. If it breaks above this level and then pulls back to it, maybe you can long in there, but it is a precarious zone now because there is a lot of traffic in front of it. So we'll keep an eye on this one. All right, the US dollar CAD is the next one we'll have a look at. This is the one that's bucking the trend a little bit. We'll have a look at the other US dollar-based pairs in a second, and also the dollar index. But they are basically getting belted at the moment, and this is definitely bucking the trend. We highlighted this area last week. This is obviously an extraordinarily strong support zone for it. It was very, very strong resistance here, as you can see. Support there, and it's finding support here again. Look, it's got all of the indicators to say that it could definitely get up to this level here around that sort of 135 to 135.50, and it's having a good crack at it. The only thing that concerns me a little bit about this is the dollar index is going the other way, and as are the other dollar-based pairs. But we'll look at them in a sec. MACD divergence definitely there. Obviously we've got stochastic divergence as well. And this is a daily time frame too, so it's a pretty serious time frame. It's had its bounce up. We'll go to a weekly and have a look at just how important this area is. On a weekly, you can see quite a solid sort of hammer forming if it does indeed get up there and close a little bit higher, which it may well do by the end of the week, which is another 24 hours or so. That could definitely be a very, very bullish sign off a very strong level of very serious support. You can see here how important this level was. This is a weekly chart again, so you can see how many weeks this provided very strong resistance in this area, and it was support there, right there, extraordinarily important zone. So it was certainly no surprise to see it bounce off it, but I guess what is a surprise is looking at what we're going to look at in a minute, which is the dollar index and some of the other dollar-based pairs. So this one, you probably you may well already be in it if you were if you're longing from this area here on the shorter time frames. But ideally, what you want to see now is probably a pullback. Then we're going to have our sequence of lower highs and higher highs and higher lows. That's what we're looking for on this. To enter a trade that's been shorting quite heavily, you need a significant time frame change of trend to get involved. So if this pulls back to around the 20 now, that gives us the reload zone that we're looking for in a 4 hour, and potentially push up into that 135 to 136 area. MACD is definitely strong even on the 4 hour, as you can see. So certainly some opportunities on it, but now it probably, if you miss the initial move, you want to be waiting for that pullback, and then we get the lightning bolt effect that we're looking for. The concerning part, the part that concerns me about the CAD, because otherwise it would be a really, really positive trade to the long, is this. This is the dollar index. You can see it's basically in free fall. Nothing seems to be stopping it. It's just breaking through support levels like they're not even there. Which is a significant, really, when you think about how significant some of these support lines are. If you go to a weekly chart, you can see once it broke through the serious support there, it's just been literal free fall. Even this level here, this level was a strong level of what should have been support. It broke through it like it was nothing, and it's in the 92 sort of 89 area now. And I guess the concerning thing about this is where is the next support? Like, it's really, if you're looking for the first support, it's probably around that sort of 91, sort of 40 area. But even then, this is a weekly chart, and it was only one touch. So, I mean, that's how significant that's going to be is debatable. The real support and resistance now is going to be around that sort of 90 level. So you can see this part here. I'll draw a horizontal line, and that's got quite a bit to fall before it gets there. But there's no saying that it couldn't do it, because it's just not a lot catching it in between. It's broken through all of the key supports. So certainly one to watch on this one. What it does to the dollar-based pairs. I mean, this is obviously going in complete inverse to the euro, which we're going to have a look at in a minute. That may be, we might have to use the euro as our base for what's going to happen with this one, because I just can't see any serious support that's going to catch it anytime soon, short of that 90-20 area. You can certainly make a bit of a case for it where it is currently, mainly because of this area here back in 2017. You can see that it was a level of support for a little bit, and even here, like it provided a little bit of support, but again, it broke through there. I'm not really counting this level as a serious level of support, so I think we just have to go to the euro and see what we can find there. One more dollar-based pair we'll have a look at, the Swissy, also in free fall. You can see that it broke a key level of support as well. we again have to go to a weekly. I mean, this just shows how significant these moves are now, which is good. It's good to see the market's actually moving in a solid trend. You can see here, even on a weekly chart, all the way back, it hasn't been this low since, let me just take it out, another magnification to give us a good insight. Here we go. So the last time it was at this level was basically the end of 2014. So you can see here it was pretty much right at this level. So, this one has found its level. You've got to go a long way to, to make a case for the support line here at around that sort of 91 cents, or even just even below the 91, just sort of in the 90s. Very, very long time ago. So it's there, of course, and it has to be respected, but we want to see, a significant change of trend before we even contemplate going long on this one. It's so far removed from its moving averages now that it's very, very difficult to do anything with. What I would be probably considering is maybe if it pulls back to that 92 sort of 70 level, maybe look for a change of trend there and push it down further, because this looks like it's a long way away from reversing to the long side. It's got a lot of work to do. We can say that before it actually starts taking long opportunities on this one. It's got to do some significant changes of trend. So it can certainly happen, but again, you've got to go a long, long way back to find support for it. So we'll keep an eye on it. Not a lot doing there, though. It needs to come back. Very difficult. If you're not already in the short, and if you were in the short, more than likely you'd already be out as well, unless you've got a very, very long-term target. So just one to keep an eye on. But yeah, let's keep an eye on the dollar index, and we'll go to the euro next. So it's pretty much doing exactly the opposite of what the dollar index is doing, and there's no surprises there, of course. So you can see that it's pushing up, over the 118.50, nearly 118.50 is just about, that's a big surprise that it hasn't actually come back and tested any form of roll reversal. It's a big, big move. Very rarely that it does a move like this without some sort of a decent pullback. But again, it's reflecting exactly the dollar weakness. So, we have to go out to a weekly chart to even find a level of resistance. And even then, it's, probably around the 119. It's almost at the 120 is actually the next serious level of resistance for this, and there's probably no saying that it won't get there. It should have definitely, from a technical standpoint, it should have pulled up at around that sort of 117.80 area. That was very clear resistance for it, but it's blasted through that like it's nothing. So we'll have to go to a daily chart. We'll see that level there. It paused there for a couple of days, but pretty insignificant really. MACD is looking still extraordinarily strong. Stochastic, even though it's in the overbought, that can stay there for a very long time. We know that, so it's not a good guide at all. You can't really use a stochastic at all in this instance. And the moving averages are still pulling away from each other. The fast run here is still accelerating away, as you can see. So almost 120 is almost the point where you'd say this is probably the one. So how to get involved in a trade like this is quite difficult, especially if you're not already in it, obviously. So what you need to be looking for is the smaller time frames. You've got a very, very strong bias to the long now, probably the next 150 pips before it actually finds real resistance. So if you want to get involved in this long one, it's going to be scalping only, and you want to be pulling back to about the 20 probably on a 1 hour chart. 15-minute chart, could be a go. If you're in front of the charts, you can basically watch it and see if you can get a 15-minute pullback to a 20 moving average, which would be fine as well. So anything on the 15-minute or 1 hour, a pullback to the 20 or the 50 moving average, and probably just keep taking it long in the direction of the trend. It would be no point trying to reverse this at this point, because you're going to have to wait too long. It's going to take a 4 hour at least change of trend at a key area, and that key area is just not here. The key area is about 150 pips away. So really the only opportunities you want to be taking here are along in the direction of the trend, but wait for the pullback. Don't just jump on. You want to be waiting for a pullback to a significant level, or at least a moving average on the smaller time frame, like something like this here, around maybe the 118, and then potentially take it long and start aiming for the 120, unless it gives us a sign otherwise, which is going to take a change of trend on a 4 hour, which is, when you look at it on a 4 hour basis, it's going to take quite a while to make a series of lower highs and lower lows. So realistically, the only trade here is long on a pullback. Okay, the pound tells us a similar story. It's basically on a rocket ship to the moon as well. The only thing with the pound is it's got resistance a little bit closer. So it's going to find probably a little bit of trouble around that sort of 3180 area. You can see here, I'll put the horizontal line there for us. You can see here that this level here was pretty strong resistance for it on a daily chart, several times over. That's probably the target still. It doesn't look like it's going to be stopping anytime soon, given the indicators. You can see the MACD still rising. The 20 is accelerating away from the 50 on a daily chart, and telling a very similar story to the euro. So realistically, probably 80 to 100 pips before it finds any serious trouble. Same method on the pound as we would on the euro. So we'd be basically going to smaller time frames, and it does work. I mean, that's the thing. You sort of look at it and you say, well, on a daily, how do you even get involved on a trade like this? But you've got to go to the smaller time frames. Once you've got that bias and it's running like a machine, you need to go to the smaller time frames and try and enter on the pullback. So you can see here, even though the daily looks like it's almost impossible to enter on, the 20 has given a heap of opportunities to get in. You can see here, and this is only in the last few days, so you can see this is July 30 all the way back to July 23, so basically the last week and a bit. If you go to a daily, you see that, and you see how do you get involved in that without, a pullback. But you go to the 1 hour, and you can see that, you've had many opportunities. Every time it touches 20 moving average, you've basically been an opportunity to go long. So that's given you about 7 opportunities, and this is no different. You need to wait for it to come back now, touch the 20, and while the strength is still so strong on the daily, you can jump on board there and basically enter the trend. But now, again, you've got a pretty clear target, right? We know that the 131.80 to 132 is going to be significant resistance for it. So a scalp would certainly not be going past that level in the first instance. So what you want to be doing, waiting for the pullback and, aiming for that sort of 40 to 80 pips as a scalping opportunity in the direction of a very, very strong trend. So we'll now move on to the US dollar yen. Look, it's not much of a story to tell here. It's basically doing it's starting to move now. Look, the thing was, it was disconnected a little bit from the dollar index for a little while there. When the dollar index was dropping, this was bucking the trend. But you can see now that it's basically in free fall. It's got nothing to catch it, really. You've got to go out a very, very long way. It had a chance to try and push up throughout today, as you can see. But obviously the earnings have been a positive for the US companies. It was a big earnings night. This is basically after New York closed now. So a lot of the results are coming out, and it's had a pretty positive effect on the market, which has seen this completely reverse all of its attempted gain today. And you have to go again out to a very, very long market blowout, which is a weekly here. You can see there all the way back to 2018 and again in August 2019. This was where the serious support is. We're ignoring this candle because that was just during the pandemic, of course, at the start of when nobody knew what was going on. But this level is very significant for it. You can see that. This is a weekly chart. It's obviously at the same level that it was back here and back here. So we can put a horizontal line there, one to keep an eye on. Again, I'm not one on trying to catch it a falling knife unless you've got a very, very good reason to do so. And the only reason you can see here to do that is a significant change of trend on, a 4-hour or even a daily. That's what it's going to take now to basically reverse this. What you want to be seeing is a series of consolidation here and then some higher highs and higher lows on a 4-hour and a daily chart. That looks a long, long way away from happening. So it's one of those ones where hard to short because obviously it's at a pretty significant level of support now. So it's difficult to short past this level with any conviction. So what you want to be doing is attempting to probably scalp off this level, maybe to the pullback, because you're going to see some sort of a pullback at some point. It's far removed from its moving averages again. So at some point it's going to want to try and retrace back to those. And this is the level that it's going to do it if it is going to do it there. But you're not going to do it with any conviction, which means that you have to go to the smaller time frame. So again, you can go back to a 1 hour. It needs to break above these moving averages. start making a series of higher highs and higher lows. So if you want to reverse, I guess a little tip, if you want to reverse the longer term trend or attempt to, you need to go to a 4 hour at the very least. But if you're going to go for an attempted scalp and try and push it back to the 20 moving average on the daily, a 1 hour will do the job, because you're only going for small amounts of profit, which means that your stop loss can be a little bit closer, because you can basically track the higher lows on the 1 hour chart. So it doesn't require as big a stop loss, because the swing lows are not going to be as far away as they would be on a 4 hour. So that means what that basically means is you can, again, I mean, even with the short, you can see here on the pound, it was on the way up, but on the short here, when you look at it on a daily chart, you say, well, how on earth are you actually even short that? Even though it's obvious that it's going down, how do you jump in with any conviction? Well, you go to the 1 hour and you can see here, every time I touch a 20, short, 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 short. we talk about it at the webinars every single week, and it's always there. That's why we talk about it, because it's a very serious indicator to use, especially in a trend. And you can see how many great opportunities you had to short this, even though the daily looks like it's impossible to get in because it's just in a free fall and you're basically just jumping on a moving train. When you're actually attempting the scalp, all you're doing is basically using the 20 moving average, and it's the same on the way up, right? So once we get a series of higher highs and higher lows, we do the same thing, scalping it on the way up to every resistance point. So basically touching the 20 on the way up, every time it pulls back, makes a higher high, higher low, and you can trade it into the resistance on the daily, which is probably going to be, more than likely back at that sort of 106. Okay, so pretty easy targets to aim for, really. All you got to do is wait for the market to turn around and do its thing, and then you can aim for these key levels, which generally will play out, because when the market is running with uncertainty, it will gravitate to these key levels. So just use the moving averages and scalp into those levels. All right, so this has been a pretty big session today. So what we'll do, we'll look at the S&P 500. This is the last one we'll look at. Again, this is at New York close now, so you can see that the earnings have obviously had a positive impact on the S&P 500. You can see this is a very, very big candle on the last hour of trading. You can see that it's been a bit up and down up until then, but after the market close, which was about 45 minutes ago now, you can see the earnings are being released, and obviously it's had a positive impact on the market. Big move up. This has been a pretty big candle, the best part of 35 points, this candle, right into this previous resistance here at sort of that 32.75 area. It finds itself at a pretty key zone. We'll take it out to a daily now. You can see here that it's pushing this top that it did back on the 23rd of July, which is basically a week ago. Big hammer candle, but again, a lot of this has been done in the last little bit of trading, which is fine. Obviously, a very, very positive result. The stochastic is pushing up, which is okay. I'm not paying a lot of attention to that, because it's obviously fundamental driven more than technical driven, but it is at that key zone now. So it's one of those ones where very difficult to trade now, really. Like you want to be looking for scalping opportunities on this, but again, it's a difficult one to trade when you're basically having a bit of a guess as to which way the fundamentals are going to go. Very important week from a news point and obviously a reporting point. So probably let this one settle down. It's a bit hard to trade, something like this when it's moving on things that aren't technically perfect, because it's not, these aren't perfect technical trades on the S&P 500 at the moment. So the only thing we can look at is say, well, it is at resistance now. If you want to attempt to maybe reverse that with some very small scalps on the smaller time frames, but this is on an hour. I mean, even then, that would prove hard to be on an hour. You'd have to go all the way back probably to a 15-minute chart. It would need to make a series of lower highs and lower lows on a 15-minute off that resistance point. But I think there are better trades to be doing than that. You're pretty much clutching at straws if you're trying to do that, really, because there's a lot of uncertainty on where this market is going. So I would probably err on the side of letting this one settle down. Let the market absorb the news that it's had, let the reporting settle down, and see if this level can actually break, or if it does indeed reverse. If it starts to pull back throughout the day and looks like the news hasn't had a big an impact as it did initially, then maybe we can look to short it back down to that level in the low 3200s. So Yeah, not the best of trades, this one. Probably just keep an eye on it and maybe set some alerts for maybe a break of this zone if it does continue on past 33, or if indeed it does start to make a series of lower highs and lower lows on a smaller time frame like an hour or a 15-minute chart. Maybe look to short it into the 3200s, but there are certainly better trades than this one. All right, so it's been a bit of a long one today, so sorry about that, but we had a lot to cover. So hopefully everyone has had a great week's trading and you've been able to catch some of these big moving trends. There's still some opportunity as we saw, so just set your alerts or keep an eye on it if you are scalping throughout the day for those pullbacks to the 20, and maybe try and jump in on some of those bigger trends that are starting to really push on now into those key support and resistance zones. Well, I hope everybody has a great weekend, and I look forward to seeing you all next week.